So we'll start with Inspire first. So we run Inspire Accountants based in the Fortitude Valley in Brisbane, but we work with clients all around Australia, as you can kind of see in the chat box. Northern Territory has a fair distribution. Whoever commented there, it's cool to see. But most of our clients are in Brisbane or Southeast Queensland, but we do have about 40% in other states or areas around Australia. And one of the things we do, which we're getting excited about because we're coming into tax planning season, is we've saved our clients over $46 million in tax since we started counting in 2015. And yeah, April, May, June each year, we usually see that number tick up in a huge way because that is our tax planning season. So looking forward to getting that kicked off very soon. Myself personally, so my name is Ben Walker. I started Inspire when I was 23, and I'm an award-winning chartered accountant with over 18 years experience now. I did start straight out of school, so straight out of grade 12, and then the next year into working with one of those big four corporates, um, which had its place, but I was glad to leave a few years later. And then I'm also the author of two books, Wealth for Life, which is all about helping business owners understand how to grow their wealth with structures and all that sort of stuff. And then It's All Sorted, which is on helping business owners um, sort out their tax side of things. So yeah, that's the two books there. And Ali, would you like me to introduce you, or would you like to take the honor?
I can introduce myself. Hi, everyone. My name is Ali. I've been with Inspire for 9 years, been an accountant for 10 of those. So
Hey.
90% of my time has been spent at Inspire, which is amazing. I am married to my lovely wife, Beck, and we've got a son called Brahmi, which has been entertaining us for the last 2 years. So that's a little bit about me. But yeah, I'm the guy behind the scenes. You don't really see me a lot these days. I used to be an account manager, but not anymore. I spend a lot of time helping the team in the background.
Yes, hugely important role in terms of training and also doing lots of reviews and helping the team with their technical development. So it's a massive help. Thank you very much. And yes, definitely a little bit more of an eye for detail than I prefer in terms of taking. So that's why you're here to co-present with me on all things Payday Super. All right, what are we covering? So here's a run through of high level what we're covering. So we're looking at what is actually changing from 1 July. We're looking at this 7 day payment rule and how that'll interact. It's really not 7 days, is the short answer, but anyway, we'll get there. The July cash flow crisis, what happens with the penalties? Because the penalty regime is changing here. It's actually probably a little bit better, is the answer in terms of if you miss something or you get something wrong. Um, the ATO's lighter approach for year one, but I wouldn't use their lighter approach if you don't need it. Let's just try get things right from day one. What we like and don't like. We're going to talk about clearinghouses, exceptions, and practical tips to help make lighter work of all of this, and then a bit of a prep checklist and timeline. So we might get cracking. Um, Alrighty, I've just seen a comment here. Sorry, don't have. Oh, okay. Sorry, Narelle. That's okay. If you don't have a camera, that's fine. That is no worries. Cool. All right. So, cool. What is changing? So the current system, and this is what everyone should be used to. So the current payment requirement is you pay quarterly in arrears. And so we're about to, like at the end of March, that'll be the March quarter finished. And then under the current rules, your super is due by the 28th of April or the 28th of the next month. Now, I want to be clear about the language on that 28th day. It's not 28 days to submit the payment. It's actually 28 days to end up in your employee's superannuation account. And that's not changing. So what that means is you often, and we recommend to clients to transfer the money about the 20th of the month. And that gives you literally 8 days for any issues with the direct debit if it bounces or payment muck-ups or even the super fund to allocate it to the employee's account. So there's actually a fair bit outside your control there, but the responsibility is yours to make sure it receives. into the fund by the 28th. That's under the current laws rules. Um, if you're late, even by a day, the technical there is that it's not tax deductible, even if you pay it a day later. Because you're late, instant non-deductible. It's that's a bit rude, and that's one of the things that is changing. If you are late or you miss your payment or you pay a little bit less than what you needed to, you must lodge a super guarantee statement. And then that last point there, so there is a minimum, and we're currently paying a minimum of 12% on what's referred to as ordinary times earnings or pretty much people's wages. And it depends on how much. So people who get paid more than 62 and a half grand in a quarter, they actually, you don't have to pay super on the balance above that. That's what they call this max contribution base here. Now, that was a quarterly thing. So let's say you paid an annual salary, as an example, of 150K, and we do have clients that opt for that sort of approach. You only have to pay super on the first 62.5K of that. Now, for general employees, it's pretty uncommon to have an annual salary. In fact, I'm sure that's breaking about 15 workplace fair work rules. But anyway, just as a explanation for what that is. That's also one of the things that's changing. All right, so what does it look like from 1 July? You've basically got to pay super every pay cycle. So if you're weekly, you got to pay super weekly. If it's fortnightly, you got to pay 26 lots of super a year. If you're monthly, it's 12. There's no, well, again, I doubt anyone's paying employees quarterly, but if you were, you'd pay super quarterly. But it's due within 7 business days of each payday. And again, the language being, I want everyone to be really clear about this. It's got to be received by the employee's super fund within 7 days, allocated to the member. And essentially, our recommendation is please pay it on payday because it's probably going to be 3 to 4 days in a good instance to get to that employee's thing. And if, let's say, you're $1,000 short and the direct debit fails, hopefully you find out on day 3 or day 4 and you're able to trigger that again and get inside that 7 days. Ideally, yeah, again, you want things in place to avoid being late. But yeah, we're really nervous on behalf of everyone that this 7 day thing doesn't mean you do payday on, let's say we do payday today on Friday, and then in a week's time, next week we pay this Friday's super. It's not that at all. Yeah, I reckon 3 or 4 days minimum you need to allow. But the safe bet here is to pay it literally the same day that you pay your team. Late payments are tax deductible. Well, that's a relief. That's nice of them. There's no more super guarantee statements. There's another statement, and Ali, I think they haven't even published that yet. Is that correct? What that
That
looks?
is correct. Yeah, we don't know what the form looks like. Hopefully, it's an easy one to fill out.
Yeah. Yeah. Well, they don't want to make it too hard to. And then the last one there is the max contribution base. So earlier I said, you only have to pay super on the first 62.5K of someone's quarterly salary. Instead of quarterly amounts now, it's an annual contribution base. So if you've got someone on a $500,000 salary, you only technically need to pay super on the first half of it. Um, is that's making sense? I mean, that's probably pretty rare examples, but yeah, cool. Seeing a couple of thumbs up. Beautiful. All right, I'll hand over to you.
Thank you, Ben. So, in my opinion, this is the biggest tax change we've seen in the last 10 years after the latest tax rate cut. So, it's a big change. So, we just want to guide you through this because it can be confusing. We're going to be throwing a lot of new terms at you. There's going to be things that you've never heard before. So feel free to ask some questions there. But one of the most important parts of this is the 7 day, 7 business day rule. So this applies to when employees fund receives the payment. It's not when you approve the payment and it's not when it clears your bank account. So this is an important part. It's not so dissimilar from what Ben mentioned with the current system, which is a bit impractical because you don't really know when that payment actually hits the super fund account for that specific employee. But you hopefully when that payment is processed by the clearinghouse before the due date, you kind of have this assumption that it did hit the employee's super fund account. So when does the 7 days actually start? The clock starts 7 days after qualifying earnings day, or QE for short. So this is a term that you're going to be hearing a lot. So this term replaced something called ordinary time earnings and essentially refers to the payments that are eligible for super. Think of salary, wages, director fees, and in some cases also subcontractors. So if they are treated as employees for super guarantee purposes, so
Mm.
they will be considered qualifying earnings as well and fall part of the 7 day cycle. Now, for example, if you have employees that you pay weekly and you've got a pay run for the week ending 15 February 2026, and your payment date falls on the 19th of February, this day will be your qualifying earnings day zero. So in this example, super received by the employee's funds within 7 business days from the 19th of February 2026. So qualifying earnings and super liability will both be reported through your STP software. So the ATO will have visibility over this.
Mm.
Now, super funds will have 3 business days to allocate the employee payment or return the contribution back to you. So this is a monumental change to what we have currently, which is 20 days. So if there are any errors, you will find out much sooner, and hopefully you're able to fix the issues within the 7 business days. Now, something crucial to keep in mind in relation to qualifying earnings, currently additional super payments like salary sacrifice do not need to be paid by the due date. However, with the new changes, these payments need to be received within the 7 business days timeframe. So if there is salary sacrifice within a pay run, you need to follow the 7 business day timeframe, if that makes sense.
Wonderful. Let's hit the next slide.
Yes, please.
Yeah. And this is why we have Ali as QA, because I thought it was 7 calendar days and it's 7 business days. Dear.
So, what counts as a business day? It's any day that is not Saturday, Sunday, or public holiday for the whole state or territory. So, this is definitely going to be a state by state thing. So, if people who are, having different holidays, like we've got, the King's birthday is different in Queensland than it is in New South Wales. You will have separate business days counted, whereas you've got regional holidays that do not count. Like in Brisbane, we've got the Eka, which normally falls sometime on Wednesday, either in August, September. So that doesn't count as part of the holidays. So we need to exclude it, and it will be part of the business day cycle. So it's any day that is not Saturday, Sunday, or a public holiday for that whole state or territory.
Mhm. Nice and straightforward. But the other thing to keep in mind here is that usually with direct debits, public holidays stuff around with those, and it usually takes an extra day or two. I don't know whether if anyone's experienced that. So yeah, maybe this is
Yeah,
what they're going for.
and sharing a recent example, we've had some business owners who did mostly the right thing with the paying March quarter super that was for last year. They paid it on, I believe, the 17th of April, but it didn't reach the super fund accounts of the employees until the 29th of April because of Easter break. So keep those in mind because it can impact your ability to the clearinghouse ability to process those payments.
Mm, goodness gracious. All right. So who does it apply to? Well, I think we've covered a little bit of this already, but all employees under standard contracts, yourselves as directors, if you are directors of your own entities, even directors' fees. I haven't heard it for a while, but 10, 15 years ago, there was a misconception that you didn't have to pay super on directors' fees. That's false. The next one there is contractors, assuming that you owe them super already. There's nothing changed that we know of around the requirement the requirements around paying super on contractors. So some contractors you have to, some you don't. So that's not changing. It's more so this will extend to super payable for them as well. You know, sports people aren't out of this one. Same with performing artists. So yeah, and I think that line down the bottom. So there's some payments or types of payments that don't attract super anyway. So it won't apply to the annual leave or long service leave and sick leave if it's paid out on termination. Yeah, it's not necessarily applying to that either. All right. So um, the double payment trap. This is a cash flow killer. Now, in the month of July, we're going to have the whole quarter of June that's due. So April, May, and June, the wages that you accrue through that and the super that's payable will be due by the normal 28th of July. But you'll also have your payroll in the month of July, whether it's weekly, fortnightly, or monthly, due within that 7 day window. So, if you think about it, that's going to be a bit of a cash flow crunch, depending on how much wages and super that you pay. And yeah, what I guess practical action steps you can take is work out what that extra amount is going to be that you'll need in July. Start putting it aside if you don't already have it set aside or able to call on. You need to be aware of this so that in the month of July it doesn't catch you off guard. Budget for the double up, and then yeah, I mean you wouldn't want any arrears anyway because current rules say that super payments are non-deductible. But if you do have super owing backwards, you need to sort that out ASAP. In any case, but cool. All right, is that pretty clear for everyone that we need to watch out for July?
A recommendation for that one, Ben, would be if you have an inkling that you might be a little bit behind in paying that July quarter, I'm sorry, that June quarter super, is to put it on a payment plan because any payments that you make in July will go towards the oldest super first. So you might be thinking you're paying for that July, for that pay cycle in July, when in fact you're paying older super. So it will go towards paying the June quarter first, and then any excess will be applied to your latest pay run.
Yeah, got it. Okay, that's even more confusing. Um, okay. What do we got? So the penalty system. Did you want to take us through this one?
Yeah, absolutely. So super payments, even if paid late now, are fully deductible. However, the penalties are much, much, much harsher.
And can I just clarify there? So let's say the June quarter
hmm
that we have to pay in July still. If you're late
hmm
on that one, is it tax deductible or is it only super relating to July onwards if you're late?
Only July onwards. So the old system will follow the old system.
Got it. Okay. You.
So obviously you've got your shortfall, which is the amount of super you didn't pay, plus interest, which is compounded daily, currently sitting at 10.65%, which is subject to change every quarter. So this follows the general interest charge figure from the ATO. It gets updated and they take into account inflation for that one. And then we've got something called administrative uplift. So this could be up to 60% and applies to the shortfall amount and interest depending on the time that you pay that shortfall. And we'll discuss that a bit shortly. And finally, we've got choice loading, which is set at 25%. This applies to when you accidentally pay super into the wrong fund of the employee. Say an employee changes funds and they notify you, but then you end up paying it in the old one. So you'll have to pay 25% a penalty on that, but it's capped at $1,200 per notice period per employee. Now, a notice period is simply the window of time the ATO is watching your super compliance. We don't know what a notice period typically is. They haven't really told us practically what it is, but it starts on the 1st of July and keeps running until the ATO tells you otherwise that that payment window has closed.
Mm. And that's maybe another good point. Like, in the current age we're in with AI and data matching just going through the roof, my gut feel is that the ATO is going to be able to, or they have the ability to, monitor this in essentially real time. So if you're a day late, it wouldn't be hard if you sort of if the ATO have their act together to actually go and start issuing non-compliance stuff pretty quickly. So I wouldn't muck around with this stuff. And even the ATO talk to the Office of State Revenues. They're all data sharing everywhere, and we've had clients where there's audits pop up because they're not maintaining certain payroll tax records in certain states, and they're all talking. So it's pretty nuts at the moment, and yeah, I don't think we can take any chances with non-compliance. So let's make sure we do what we can to make it all happen.
Agreed. So it is becoming quite easy for them to catch people, and
Mm.
a lot of the things are going to be automated. So it's not like someone there is pressing buttons behind a screen. It's going to be largely automated. And, under the new system, all of these payments, luckily, the shortfall, the interest, the admin uplift, and the choice loading are all tax deductible. The only payment under the new system that is non-deductible is something called late payment penalty, which we'll discuss a bit later on. The administrative uplift can be actually reduced to 0%, and I'll discuss that a bit later on how we can do that. But in front of you here, we've got an example to illustrate how the penalties will apply. So it's something that we've copied actually from the legislation. So we've got Juliet here, who runs a business, has 100 employees, each paid $1,000 of qualifying earnings at 12% of super. That's 120 per employee. She pays super on time for 70 employees, but then has a shortfall for the 30 employees, with one employee super being paid into the wrong fund. So you've got scenario one, when Juliet discovers that there was a shortfall within that 7 business days timeframe and still manages to correct it. So we can see that there's no penalties, no interest, no uplift, and no choice loading. Whereas scenario two, Juliet discovers that there's a shortfall, and before the ATO issues an assessment, she pays the shortfall within 25 days, and that has reduced it to zero. But then she's got a little bit of interest, which is $25 and $15 of admin uplift. You see that the admin uplift is only applied to the interest, not to the shortfall. And then finally, we've got $30 worth of choice loading. So about $70 out of pocket for that one, on top of the super that was required to be paid. And finally, this is not the fun one, which is Juliet doesn't do anything, waits for the ATO to issues a self-assessment. Then Juliet has the shortfall to pay, the interest of $35 because she waited that long for 35 days. There is an admin uplift of $2,000, which is 60% on the shortfall and interest, and then $30 on the choice loading. So, so just for clarity here, we can see the three different scenarios. And scenario one is where you want to be, is you identify the errors or issues early on and try to fix them within that 7 business days time frame. But it's not a biggie if you end up in the second scenario where you still do it before the ATO sort of nudges you and you're out of pocket by $70, which is not a huge deal compared when you're comparing it to the last one, which you wait for the ATO to tell you, which then they'll apply higher interest because of the time it took. They'll also they apply the 60% admin uplift, which is more than 2 grand, and then the choice loading. So you're paying an extra $2,000 just for waiting for the ATO to issue the assessment. So the key thing here is to be very, very proactive. All right, if we can go to the next slide. Now, this one will catch many by surprise. Now, if you underpay super and don't correct it immediately, your next payment will be applied to to the previous shortfall. So if you miss week one, part of your week two payment will go towards week one shortfall, creating a shortfall for week two, and this goes on and on and on. Each shortfall triggers its own super guarantee charge. The only way to break the cycle, so to speak, is to have an extra catch up payment for that shortfall. So be extra mindful of not underpaying. So, very, very close attention to that. It is very hard to actually do that unless you accidentally entered the wrong amounts manually. If you're using something like Xero or QuickBooks or MyOb, you shouldn't really run into these issues if you've got the pay correctly entered. Now, but what happens when there is an overpayment instead of an underpayment? Well, the ATO is not so generous there as to reward you, but what you can do is carry forward contributions for 12 months to apply them against a future payment or even a shortfall. So keep that in mind if you accidentally overpay. It is also very difficult to overpay, but if in that case, you can just apply them to the next pay run for that same employee. Say you overpaid by $150 and that employee next pay run is owed 150, you can just leave it as is, and that overpayment should cover that future payment amount. If we can go to the next slide, Rose, thank you. So there's a key shift in compliance approach. Under the current system, you need to prepare super guarantee statements, which are a pain. We've helped many clients complete these. They're not particularly enjoyable to fill. They need to be filled in for each quarter, and there's heavy, heavy compliance work there. However, under the new system, there's a voluntary disclosure statement. Now, as discussed earlier, we don't know what the form looks like. Hopefully, it's an easy one to fill. But self-reporting is going to be hugely valuable because it could cut your admin uplift from 60% down to zero. If you can go to the next slide, I'll show you what that looks like.
I am okay. My
You're
computer
okay?
just decided to restart in the middle of a webinar for an update.
That's okay. Welcome back, Ben.
Thank you.
So if you do voluntary disclosure, you can almost reduce it to zero depending on your situation. So if you, for instance, disclose within 30 days of QE day. So say your QE day is, on the first of the month, and then by the end of that 30-day period, you disclose and you have a clean history for the last 2 years, the ATO will cut down your admin uplift from 60 down to zero. And you can see this is a sliding scale. So all the way, if you've got really bad assessment period in the last 2 years and don't do any disclosures whatsoever and wait for the ATO to assess you, it could be 60%. So the the key message here from especially from earlier is try to be proactive. If you're late, that's okay. Just disclose it and move on rather than waiting for the ATO to tell you what to do and then end up paying a lot more than what you bargained for. This is now what the ATO will do for the next 12 months. So they know that it's a big shift. And so they've published this guideline that tells us how they prioritize their attention in year one. So they don't want to come guns blazing for the first 12 months. They'll give you time to adjust to the new system and think of it like a queuing system. They've grouped employers into risk tiers and they'll focus their energy accordingly. They've got limited resources. They're not trying to catch everyone here. So if you're a low risk employer, so you're making genuine efforts to comply, paying on time most of the time and fixing their mistakes very quickly, then you can expect the ATO not to, follow you up because you're mostly doing the right thing. Whereas you've got your medium risk employers, you're late more often than not. You might get a nudge, a letter, or a review, but it's not so serious yet. Whereas the last bucket there with the high risk employers is repeated non-compliance, no sign of trying to fix issues. This is where the ATO will direct most of its resources. So this guideline essentially affects how aggressive the ATO will be in chasing you. It doesn't wipe the legal obligation, essentially. So, although this is not the ATO official stance on this, and don't come after me for saying this, I suspect that employers who try to do the right thing, fix problems early on, and underpayments are unlikely to be penalized in the first 12 months.
Hmm.
So this is my personal opinion. I don't think there's an official stance on this, but this guideline suggests that. But so the good news here to take for everyone is everyone will have a clean slate from July 1. So even if you're being non-compliant now for the last couple of years or months, you'll have a clean slate. So try to use that to your advantage. So this is what I spoke about earlier is I mentioned on top of interest, admin uplift, and choice loading, there is a late payment penalty. Unlike the others, the ATO cannot legally reduce this payment and it's not tax deductible. So once the ATO raises a super guarantee charge assessment, the clock starts. At day 28, they issue a notice to pay. If you still haven't paid after another 28 days, so that's day 56, the penalty is automatically applied. So we can't help you even if we wanted to. And the rate is set at 25% for most employers and 50% for repeat offenders. The rate
Hmm.
is applied to the shortfall, interest, admin uplift, and choice loading. So be very, very careful here. When this happens to you and you're issued with an assessment, please pay it as soon as practicable. Don't wait for another 28 days and cop another 25% or 50%. As you can see here, the penalties are much, 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 much harsher than the previous system. But you've got a lot of it is tax deductible, but the penalty for late payment is not. For example, if you have a $5,000 unpaid charge from an ATO assessment, your penalty will be 1,200 or 2,500 for repeat offenders if they didn't pay within 56 days from the ATO issuing an assessment. Hopefully that clears things for everyone.
Yeah. But to end up here, you've got to have ignored a fairly probably intense looking notice from the ATO demanding you pay money. So yeah, it's well, it's a you should see it coming if you
Yeah,
end up in a position with these undeductible penalties.
agreed.
Alrighty. What we like about Payday Super. Well, yeah, again, I think most of this we've sort of covered, but the positive is late payments are now tax deductible. Benefit to employees is that they get their super faster, and it's sort of like those calculators you see with mortgage repayments, switching from monthly repayments to fortnightly or weekly, saves you interest in the scheme of things with your mortgage. But I think from the employee's perspective, getting paid more frequently will probably compound over time and result in larger super balances for team members at retirement with that compound effect. The next one's no more super guarantee statements. Yeah, again, they'll be replaced with a different style of form. But yeah, there's a few things about those SG statements that are pretty horrible. Surplus contributions carry forward, and yeah, you get that 12-month shortfall carry forward thingy, and then bonuses and commissions get extra time. And this might have been when I dropped off, Ali, but in terms of like, if let's say you've got a new team member, a new employee who starts with you, did you cover that you get a bit extra time?
That will be in the next couple of slides, I think.
Okay, cool. Very good. Very good. What we don't like, well, first of all, is a massive admin increase for particularly weekly payers. You're going to have to do 52 of these payment runs instead of four. Like that's a massive overhead. And I mean, if you're already paying weekly, you've probably got redundancy for times you might be away for making sure payroll's paid. But yeah, it's admin wise, it's crazy. And there's a lot to consider in changing your payment cycle, but even changing from weekly to fortnightly, you'll halve the amount of pay runs you need to do a year and halve the amount of payday super as well. Um, Monthly payments, even less admin as well, if you can make it happen. Yeah, cash flow, yeah, particularly in July this year, you get hit with essentially 4 months of super in 1 month, in the month of July. So just be ready for that. Um, Rejected payments still count against you. So yeah, if the fund still, says, oh, you got a number wrong here, pushes it back to you, and then you're late with that payment, in a way, it's essentially your fault in the eyes of the ATO. And then the last one here, I've not heard of anyone use this in a very long time, but the ATO clearinghouse is also stopping at the end of this financial year, right before Payday Super kicks off. So hopefully you're not using Payday Super. Sorry, hopefully you're not using the ATO clearinghouse. You're using something that's built into something like Xero or MyOb or QuickBooks. Those payroll platforms should give you ways to make light work of this automatic super. I know that Xero system is amazing, but if you're not using Xero, one of the other big platform providers should have this squared away. And if they don't, they're living it a bit late, but if they don't, they should have by 1 July. Oh, yeah. Yeah, I mean, I don't, again, if anyone wants to talk about the ATO clearinghouse, I'm happy to, but it's something that just people haven't used in years for what I've seen. Um, but then when you are looking for a way to pay, and you could even check your payroll software providers, make sure that the processing time is 3 to 5 days or less. It's compatible with wherever you do your payroll software as well. Again, yeah, just absolutely love Xero's built-in super payment system. It's sensational, and you can even try it. Like if you're changing systems, you can try it before the Payday Super requirements come in as well. Like you can just pick a pay run to essentially dry run the Payday Super thing and actually pay it in there. But yeah,
Yeah, and we've been promised that the processing times by the clearing houses is going to be much faster with Payday Super, whereas before we've seen, like in the current system, it's 3 to 5 business days. Now I think they're aiming for 1 to 3 business days. So very, very fast turnaround time.
yep, that's it. And Shane's asked the question, does Xero have auto super function that can be set up? It absolutely does. Now, it's not automated in a sense of it does everything for you, but it does a lot of the heavy lifting, the admin of actually making the super payment. So you still have to go into the automatic super section, select what super payments you want to have, and then you essentially attach it to one of your bank accounts and it direct debits your bank account for the full super amount for everyone. And then it goes and splits it up into all their accounts for you. So yeah, would absolutely recommend setting that up and getting that to do all the heavy lifting.
Yeah, and I'm pretty sure Zero as well has now auto super for all their subscriptions, even the lowest one, excluding
Ah,
the ones that you get with your accountant. We're talking about the paid ones that you normally get as a business,
yeah.
in anticipation for the closing down of the ATO clearinghouse. They've added it to all their subscription when before it used to be only the higher up ones get auto super.
Mm, beautiful. Beautiful.
All righty. Well, the default rate is 7 business days from the qualifying earning day, but there is a small number of situations where you get more time. So this is what Ben was speaking about a little bit earlier, alluding to, is new employees, you get 20 business days, but only for that first super payment. After that, the standard 7 day rule applies. You could also get 20 business days if an employee switches funds. So if you are notified by an employee that they switched funds, you get 20 business days to pay for that payment to be received. And the most practically useful exception for businesses is for commission or bonus-based staff that is out of cycle payments. With these irregular payments, the qualifying earning day is treated as the next regular payday. So 7 day clock starts until that next pay run. So uh, that's an exception there for those irregular payments. But we also have something for exceptional circumstances. Now, like natural disasters, Australia is very prone to receive, those depending on where you are, floods, all of these issues can then extend, the commissioner can extend that deadline to 20 days. We've got things like also widespread technology outages. If zero is down for everyone for a few days and you couldn't process your payment for whatever reason, the commissioner can extend that deadline to 20 business days. But here, what doesn't qualify? If you've got cash flow problems, forgotten passwords, staff illnesses, software glitches or bank processing delays, that really won't qualify you. And finally, there is closely held employees like your family members. They can still be reported quarterly, but the 7 day payment business days still applies to that payment date.
Nice and straightforward. Dearie me.
If we could go to
Um,
the next slide.
yeah.
So Ben spoke about this a little bit in the beginning. So under the old system, the cap effectively resets every quarter. From 1st of July, it's a single annual threshold. And the difference matters in situations. And Ben gave an example, but say you've got director fees that you might want to pay in June, you pay 100 grand. Under the old system, this 100 grand would have been capped at 62,500. So the super would have been about $7,500 worth. Whereas the new system, the super will apply to the 100K amount. So it will be 12,000 instead of 7,500. So you're paying 4,500 more. Now, this cap is largely optional. Like it's not something you have to follow. So you can actually go above that amount. Some employers do. So you don't need to stop at that amount. But if you do go over, that means the employee is likely to have excess super contributions, so they get taxed on that amount later when the ATO assesses them. This might also apply to, year-end bonuses if you've got that. The 80, you've got an employee that you pay 80 grand worth of bonus in one quarter at the end of the year. Under the old system, this would have been capped at 62. On top of, you need to consider their other pay. Under the new system, once the cap is achieved, so once that employee hits 250 threshold in any time during the year, you stop paying their super. It's optional. You can continue to pay if you want to, but there is no legal requirement for you to do that. I hope kind of that makes sense.
Yep. Very good. All right, so what do you do? Yeah, of course, if you've got any back pay or super due, do it ASAP. Review your pay cycle frequency if you can move from weekly to fortnightly or fortnightly to monthly. Again, there's moving parts and consent from team members and all that sort of stuff that you might need to consider. And even different awards allow different payment frequencies. But yeah, if you can reduce your admin, that would be amazing. Make sure your software is right. I wouldn't worry about a manual clearinghouse. It's just too much mucking around. If you've got employees who haven't given you the right super details, it's going to start to hurt if we don't get those bedded down. So start that now. Now, between March and yeah, March and May, I mean, the other thing that's probably not mentioned here is make sure you set up yourself for cash flow and work out what your shortfall is in July. Um, you can even like it sounds like Shan, you might need to explore the automatic super payments. Like if you're not familiar with those in the payroll software, then make sure you start sussing that out ASAP. And even do the dry run to make sure it all works, because that first direct debit, for instance, you might have to match your bank account up and do all that sort of stuff. So yeah, I wouldn't leave that till the first requirement. Or just test one early, even if it's one super payment for one employee um, early. That's fine. Um, Cool. What else? Yeah, so from 1 July, it's game on. One option is to pop in your calendar. If you pay payroll on a certain day or when you're processing it, um, roll forward a couple of months in your calendar now, drop down, add a new block in there saying, Payday Super, make sure you've got some sort of reminder in there, on the normal payroll processing day, to make sure you're all set up, and we'll ideally, again, best practice will be pay your team, pay super, same time, click, 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 done. And then hopefully nothing bounces and we're all good. So, cool. Um, cool. We've got a couple of questions. So, Shan, would fortnightly pay cycles be better now, having to pay super on every cycle? Yeah, I guess there are some awards where you have to pay fortnightly, maybe even weekly. I'm not quite sure, but some awards allow you to pay monthly. And then I think I'd probably recommend consulting with like a lawyer that has experience with HR in terms of approaching a team, because changing their contracts from weekly to fortnightly or fortnightly to monthly, you might need their consent as part of that. So yeah, and if you can't get everyone on board, then is it really going to help save you time? I'm not sure. So, but yeah, the less frequently you do payroll, the less times a year you have to worry about payday super. Kate, so you've mentioned you're a small firm dealing with so many clients, so many payrolls. What's the best scenario? So yeah, we don't actually do payroll for clients. We made a pretty distinct or a pretty clear decision around that, because of how administration heavy it is. But if we did do payroll for our clients, we would be getting onto them ASAP about the changes, and particularly on the cash flow requirements in July. And I guess you don't want their problem to become yours and start pointing fingers and all that sort of stuff. That's ideally what we can avoid by yeah, just getting communication out to them, and making sure they're aware of the obligations, and on board. But yeah, again, like even renegotiating what it looks like with that, with the agreement you've got between your clients, because the admin will be more. It'll be more time sensitive, more risk as well. So probably need to renegotiate the payroll services with your clients. Crew and musician invoices. So, Ali, I think earlier you mentioned it does apply to contractors, where you owe superannuation to them otherwise. So you pay their invoice, and then you've got 7 business days to pay their super as well. That'd be it.
Correct. Yeah, so it's when you pay them. So the QE day will start on that payment date. So you've got 7 business days then to pay them. It's not when you first receive their invoice, so to speak. It's when you pay them. That's when you also need to pay their super within seven
Yeah,
business days.
yeah. Cool. All right. Thank you.
So you'll definitely have multiple QE days if you've got contractors, you've got employees, and you've got people that you don't generally pay on a regular basis. So you'll have different QE days to kind of shuffle around.
Yep. And a related timing question. So Melody's asked, closely held employees can still be quarterly. That's not quite my understanding. If you pay them quarterly, it can be, but
Yeah, so with that one is like, well, this is not, fair work advice. Like this is just with closely held employees being on a quarterly basis, provided that that's okay. Then, if you process a pay run for a quarter ending 31st of March, then the payment will need to be paid within 7 days of that QE day or payment
mm,
date.
Yeah, so I guess how I interpret that is closely held employees doesn't change the 7-day payment obligation. It's just you can play around with the timing of that payment a bit easier than an
Yeah.
arm's length.
Yeah, so you might need to pay them every quarter, but still it's within 7 business days.
Yep. Yep, yep, yep. Cool. Nick's asked, what problem is the ATO trying to solve implementing the change to have super paid with each wage payment? No frigging idea what problem it is. I think they're just more want. Well, I think the intention here is to match the flow of super to when the person is otherwise paid, and I think it's more of a improving the employee's outcome rather than worrying about trying to help a business problem, if that makes sense. Yeah, I think it's that sort of take is my guess. Unknown, but assumption.
I think the intention when I read the legislation behind this is there's a few key things that they're targeting. They want to make it very clear that they want employees to be paid their super because there's currently a very large non-compliance. So they want to punish people harshly who do not do the right thing, and they want to reward the people who try to do the right thing. So whereas now the current system, even if you try to do the right thing,
Mm,
nothing is deductible. Under the new rules, they are deductible. So there is an incentive for you to, do the right thing and then everything will be deductible. So your out of pocket is definitely going to be much better. There's
mm,
also the economic part of it is the faster the super payments go into an employee bank account, the faster they're invested. So you don't wait for every quarter for that to go in. Now, I don't know how much will that mean. Every quarter you wait to pay that amount, or every time that it doesn't go in. So that's lack of investments going into the employee super fund. That's just the hunch there. But yeah, the two parts earlier that I mentioned,
mm.
they're I think the key parts that they're trying to target.
Yeah, and that is a good point and a bit of a fair square up. So Ali gave an example where in April over Easter, someone transferred on the 18th and it went in on the 29th. So technically not deductible, technically didn't meet the rules but it was 1 day late. So under these new rules, that I think let's imagine you just pay 1 day worth of interest. Under the old rules, if it took a year for the ATO to audit that, and even though it was paid a day late, the interest applies on the full amount of the super until that form is lodged.
Mm.
And that just makes me furious to think that that exists. So not only is the 1 day late not deductible, but the interest applies until literally the form is signed and lodged. So that's a really dumb way to do it, and that would be a fix I would see, as compared to the new version versus old. But
And there's certainly some stuff that I practically don't like, and I don't know if there is a fix for it, which is when the employee super fund receives the payment. Now,
mm,
this is highly impractical under the old and new system. You don't really know when the employee received it. So that example that I gave earlier with the payment being made on the 17th of April, but processed on the 29th. So we're painstakingly now requested the business owner to follow up each employee to check their super fund account to see when that payment is received. And guess what? Some of them have already confirmed that they've received it on the 28th, making those payment deductible. But it does signal that some payments were received by some employees after that date, which then won't be deductible. So there is still impractical ways but with the new system, it is a little bit more transparent. So
mm.
I like it a little bit better because of the deductibility part and also the disclosure that reduces your admin uplift significantly.
Yeah. And if you pick the problem up yourself, others,
Correct.
yeah,
Yeah.
they reduce the penalty bits to zero. So
Yeah.
that's
So
handy.
So I think in my opinion, what you want to do now is you want to brief your team on the new requirements. So all your employees, depending on how large your payroll is you want to let them know about the new requirements and the processes, and also remind them to let you know if they're going to change super funds. Please to let you know. Now, obviously, if the employee changes super funds and they don't tell you, that's not going to fall on you, hopefully. But if you encourage them to tell you early on when they've switched super funds, obviously you've got that. Remember the 20 business days when the employee switches. So hopefully you catch all the issues by then. My other encouragement would be is to attend a training session from your payroll provider. So if you haven't done payroll in a while, or you need a little bit of refresher, they're all running Payday Super webinars. I'm pretty sure Zero has one on the 19th of March, so you could still sign up for that one. I'm sure there's others for MyOb and QuickBooks, hopefully, so you can Google those and attend them to sort of help you get ready for Payday Super.
Yep, yep. Beautiful. Um, cool. All righty. Well, we've done a bit of Q&A as we've gone, and we are right on time, so we might leave it there. But just one last thing, if you're not currently working with us and you want to explore what that looks like, then the way to explore it is by having an initial chat with one of our accountants, and JB from our team just posted the link if you want to explore that. But yeah, thank you everyone for joining today. Yeah, not it doesn't really feel like an overall positive thing, but hopefully it becomes part of our normal process. And unfortunately, we don't have a choice whether to comply with this one or not. Well, I guess we always have a choice. It's just what outcome will happen at the end of the day. But yeah, all right. Well, we're all in it together.
Yeah, we're gonna be here to help if you've got any questions. You've got, if you're already a client of ours, please reach out to your contact person and manager. They'll be able to answer some question. Yeah, sort of one of the last recommendations before I let everyone go is try to verify all employee super funds now before everything starts. So get all your ducks in order before everything starts to get really busy. We're heading into tax planning at the moment, so things will get painfully busy for everyone, including our clients. So, yeah, try to get everything in order, verify all the information, do a couple of test pay runs just to ensure everything is working and in order. Yeah, and good luck, everyone. It's not easy, it's very tough, but there is a lot of positives with the new system.
Some positives.
I feel I'm a bit more optimistic than you, Ben.
Dear. Maybe. All righty. Well, thanks everyone for joining, and we'll see you on the next webinar.
Thanks,
Thanks very
everybody.
much.
Bye bye.
Bye bye.